Bitcoin has dropped over 20% since its yearly high, but can it bounce and make a recovery? Let's find out. Hello everyone, welcome back to another cryptocurrency video. My name is J1 General, and if you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it always makes help the channel grow. If you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can shop at 5% off. So without further ado, let's get into the video. And Bitcoin has dropped over 20% since its yearly high of breaching that elusive $48,000. You know, we had our eye on this level. I've talked about it many times in previous videos and on X. If you don't follow me on X, make sure you go follow me on X at J1General_. But if we take this Fibonacci level, we've been looking at this for quite a while now. You can see that we did touch that golden ratio, that 618 level. We just poked our heads above it at around just shy of 49k, but we did breach 48k, which was our target. And since then, the price of Bitcoin has plummeted 20%. Yeah, I think it's safe to say that the Bitcoin spot ETF was indeed a sell the news event, up until we have the next narrative, which would be the Bitcoin halving, which would come in April. That's another narrative that helps sparks the Bitcoin price, and rumors say that that's what sparks the initial bull market in the first place. But in today's video, we're going to discuss some key levels and why I think the Bitcoin price could bounce in the short term. But first, let's take a look at some potential downside targets, because we've got the bull market support band, yeah, which is currently ranging between 36,200 and 37,159, this level right here, yeah. And we've also discussed in prior videos that in every February of the halving year, the price of Bitcoin always makes its way back to the bull market support band. So if we go back to the last halving year back in 2020, you can see that in February of the halving year, the Bitcoin price went down to the bull market support band. If we go back to 2016, you can see that in February of the halving year, the Bitcoin price went back to the bull market support band. If we go back to 2012, you guessed it, the price of Bitcoin went down to the bull market support band in February. So in February of the halving year, Bitcoin always makes its way back to the bull market support band. So will it happen again this halving year in February? I do think so. I do think so that the price of Bitcoin will make its way to the bull market support band in February. I mean, we're not even that far away from it right now. If we take a look and take a price measurement to see how far away we are from the bull market support band, it is currently only 5 to 8% away. And that's if we went to the bull market support band today, which is the 23rd of January. If we go and head into February, you have to essentially understand that the bull market support band will increase in value over the coming weeks, because they are moving averages and they are lagging indicators. So the prices over here are replacing the prices over here. So over time, the bull market support band will look to trend up with time. So in February, the bull market support band could be even higher. Currently, as I mentioned before, we are at levels of 36k and 37k. It could easily make its way up to 38k by the time February comes. So that's just one level of support that the bulls could look to hold before we make that bounce that I'm suggesting that we could do. I'm going to back up some narratives right here, because I want to take a look at the Bitcoin dominance. I made a video on the Bitcoin dominance yesterday, and I kind of alluded to the fact that the Bitcoin dominance will continue to rise as long as interest rates stay high and we are in a risk-off environment, because liquidity from the higher risk plays are flowing into the lower risk plays. It just happens in all financial markets when we have a constricting economy. And at the moment, the bull market support band within the Bitcoin dominance is currently getting touched. Yeah, it's currently getting touched at this level right here. So the bull market support band for the Bitcoin dominance is 51.5% to 52%. Now this is very, very important, yeah, because do we get rejected from this level? If we get rejected from this level, then we can ultimately assume that the Bitcoin dominance will come back down to these levels of 50%. Yeah, it's a psychological number 2. So we have to keep an eye on this. If this was indeed a fake out, then the Bitcoin dominance could rise back up, and I am of the opinion that the Bitcoin dominance will rise, because just like how we analyzed the Fibonacci levels with the Bitcoin price reaching that 618, if we take the Fibonacci for, whoops, not this chart, if we take the Fibonacci for the Bitcoin dominance, you can see that in all last cycles as well, this is this cycle, but in last cycles we did touch that elusive 618 ratio, just like how we did with price, and the 618 is currently around that 60% level right here. So I do think we will hit that 60%, it's just a matter of time. But at the moment, the Bitcoin dominance is currently underneath its bull market support band. So Bitcoin is showing strength ever since Ethereum put in that monster candle. But I do think that Bitcoin will end up breaking above its bull market support band again. Another indicator I want to look at is the DXY, which is the US dollar index. This chart is very good to analyze within cryptocurrency as well, because this has a negative correlation with Bitcoin. Now, what do I mean by that? So you can use the US dollar index to essentially navigate how the price of Bitcoin can move. Now, because they have such a negative correlation, and let me show you a couple of examples. Yeah, so whenever the DXY is trending down, you know that Bitcoin is likely to be trending up, because we are on a risk on environment as the value of the dollar is decreasing. On the other hand, if the DXY is trending up, it shows that we are in a risk off environment and that the price of Bitcoin should be going down. However, the Bitcoin dominance should be going up. Now, what do I mean by that? So if we are in a risk on environment, yeah, for example, 2020 all the way down to the end of 2020 going into 2021, the US dollar index was trending down for the whole year, and we know that's when crypto blew and had its penultimate bull run. Yeah, when that is trending down, Bitcoin trends up. And just like how in 2022 we had a bear market year for Bitcoin, but look at the DXY, it just ripped all the way up completely. So we must also analyze as well that if the US dollar index is rising up, and it means that we are in a risk off environment, it shows that, well, it should signify that liquidity from the higher risk assets will go into the higher risk assets. It happens in the S&P as well, where the Magnificent Seven makes up more than, well, combined makes up more in market cap than the rest of the S&P combined. Yeah, that's just the way it goes once we're in a risk off environment, because Apple, Microsoft, these big companies, these blue chips ain't going to go anywhere. Just like Bitcoin, it's not going to go anywhere. But take a random altcoin that's ranked 2000, you know that's probably going to go down the drain and just bleed against Bitcoin for the rest of its time. But yeah, the thing with the DXY, guys, is that we're currently building a base right now. Yeah, and I've marked out a base right here. And you can see that this base is around that 101 level, that 102 level, and the DXY is currently at its bull market support band. And I think it will actually get rejected. I think it will get rejected and then come back down to retest this baseline before ultimately trending back up. Yeah. So what does that mean in the short term? In the short term, it means that the DXY is going to trend down, which means that Bitcoin is going to trend up and potentially bounce. But then ultimately the US dollar index will trend up, resulting in Bitcoin making a lower low. That is what I think. And I'm going to back this thesis up with some liquidity charts as well, because it's just funny how they just are confluent with each other. If we take a look at the liquidation heat map, and this is on the 24-hour, you can see that the majority of liquidations lie between 38 and 39k. Yeah, so in the very, very short term, the price of Bitcoin can go as low as 38k. But if we look at the 3-day chart, I want you to see something. The 3-day chart shows that the majority of liquidity is between 41 and 42.5k. This is part of the reason why I think that Bitcoin could bounce. And if we take a look at the weekly, you can see again that the majority of the liquidity is between 42 and 44k. So the price of Bitcoin, I believe, will reach these levels because the market makers will want to grab that liquidity, putting in a bounce before ultimately resulting in a lower low, which is also confluent with the Bitcoin dominance, which is also confluent with the US dollar index, which is also confluent with the price of Bitcoin making a bounce to put in that lower high before ultimately revisiting the bull market support band in February. So that's it from me today, guys. I hope you all enjoyed the video. If you did, make sure you hit that thumbs up, make sure you hit that subscribe button, as it always means a lot. And as always, it's been your boy J1 General. Thank you and goodbye.